Hello and welcome to the Toolkit for Traders YouTube channel, where we give you the tools for trading success. And today we're on to our 10th of 12 lessons in our MQL4 programming tutorial series, how to code your own EAs. So this one is, I'm sure lots of people will like this one. This one is about risk management and how to implement basic risk management in your expert advisors. So today's video, we're going to look at using inputs to set a fixed stop loss. We're also going to look at how to use the average true range, or the ATR, to create a volatility based stop. And then we're going to look at how we can set up our expert advisor to risk a certain percentage of our account balance for each trade. So if you think that would be good and you want to learn how to do that, then stick around for the rest of the video. So the quote for today's lesson is about risk, and the quote is, "The biggest risk a person can take is to do nothing." And that's by Robert Kiyosaki, who is the author of Rich Dad, Poor Dad, one of my favorite books. Definitely recommend it. But yeah, you know, if you want to be successful in life, you've got to take risks. So we're going to look at the basic formulas for risk management. I know many of you will already know this kind of stuff, but it's worth going through some of the basics for people that are not so familiar with it, so it's easier to see what I'm doing in the code later on. So firstly, there are a few ways of controlling our risk with an EA, and I'll go through a few of those now. One of them is to use no stop loss or take profit at all. Usually these systems, so you know, often you'll see people say you've got to use a stop loss, you've got to use a take profit, but when you're trading with EAs, you've not got to battle with personal psychology, so that's not as big a problem. You're not going to battle with yourself to close out a trade when you know you should, so you can more confidently use a no stop loss or take profit, but obviously doing so means you could lose all your balance if you don't use a stop loss, and equally if you don't use a take profit, you could miss out. You could not take trades when you do. But generally, usually, and you know, for most of the EAs that I've programmed and back tested and used, systems without a stop loss are usually more profitable than systems that use a stop loss. But you know, working that way, it's without stop losses, it's more difficult to trade. As I say, you've got the element of psychology coming in, but in general, stop losses and take profits reduce your overall profit. You can use a fixed stop loss, so you use a set number of pips or points, you know, to define your risk and potentially define your profit as well. Very easy to manage your volume this way. And to trade small, you know, if you're using a fixed amount and you use fixed stop losses, it's very easy to calculate how much you've got to risk each trade across all pairs, because it's always it's broadly the same. And certainly as you're starting out, you know, this might be the way to go with a fixed stop loss and a fixed lot size. Volatility-based stops are a bit more advanced. You need some way to calculate your volatility, like the average true range, which is one of the most common methods, and then you set your stop loss as a proportion of the average true range. And what that effectively means is that you're going to risk less when the volatility is high per point movement. And you're going to risk more when volatility is low. That can have some uncontrolled consequences. You could miss out on some big moves when volatility. Some systems do rely on high volatility, and as well, you know, if you're putting a lot in when volatility is very, very low, you could end up with really large position sizes that can go a bit wayward. So you do have to be a bit careful with that, and we especially have to control for very, very low volatility. Make sure our positions are not too big. The other way you can set your stop losses is to use previous highs or lows. Typically, price action traders will do something along these lines. Very easy to see visually, a little bit more difficult to implement by code, but you can easily analyze the highs and lows of a price series, or use an indicator such as the Bill Williams fractal indicator and take the outputs from that, which is built into MT4, and use the last one of those for instance, as your high or low, which is fairly simple to do once you know what you're doing. And then you've got to set your volume. Once you've got your stop loss, you've got to set your volume. Now, you know, like I said before about fixed stop losses, setting a fixed amount for your volume is the simplest way, and I would definitely say it's the best way to start a system. You know, if you're testing a system out to see whether it's live, you know, use it with the absolute minimum volume you can, usually 0.01, and get it running. You're not going to make very much money in that way, but at the very least, you get to see how the system performs live, and then you can scale from there. Better to do it that way than to risk start too big and lose a lot of money and then have to scale down. So definitely start small, start with a fixed amount is a good way to go, especially if you've not got a lot of confidence in your system. The other one is you can do, and this is quite a common one, you'll see something like the 2% rule, where you set your volume based on a percentage of your account balance at risk relative to your stock balance. So you work through a bit of a formula, which is more difficult to do if you're doing this manually, because you've got to work out the formula each time. Very simple to implement in code. You implement the formula in code and it's done once, and then it will do it for you. Other ones you can do, more advanced ones, is to use something like the Kelly criterion or optimal F. Usually people will go for half the Kelly criterion or half optimal F, because that errs on the side of caution, but they are sort of mathematically optimal ways to allocate your funds to your system. So, but the product of that, and I will go through these at some point in more detail, but if you over-egg it and if your estimate of the Kelly criterion or optimal F is inaccurate, then you could end up losing more money. So that's why generally people go underestimate the value and use half of it. And this is very good for systems that don't use stop loss, because if you've not got a stop loss, you can't obviously use a percentage of your balance to weigh up your risk. So by using sort of back-tested performance and expected profit factor or some other target like that, you can then allocate your margin or your lot sizes based on the Kelly criterion or optimal F. So we're going to use the percentage of account balance based risk, because it's the most commonly used ones in EAs. And excuse me, just taking a drink. I'm going to show you some simple formula that you need to know for doing that, and it's very easy to implement in code. So I'll go through this now, and then we'll go through it in the editor shortly. So here's an example of how we use how we start it off. So we have a variable, a double variable that we're going to put our risk percentage in of 1.5. And then we need to work out obviously what 1.5% of our balance is. So we create another double variable called risk amount, and we set that to be equal to our account equity, which is which will get for us our balance from the MT4 terminal, excuse me, and that will bring that out, and then we times that by our risk percent, which is obviously 1.5, and we divide that by 100 so that it's that we convert our percentage into a decimal. So it's a very simple formula. We get our balance with the account equity function, and we times it by a risk percent over 100 so that it's a fractional risk percentage. And so that's how much we want to risk per trade. We then need to do something a little more complicated, which is work out the value of a tick. So a tick is the smallest price change on your MT4. So we need to get that from the terminal, because this will vary, and this is one of the most tricky parts of EAs, is that it does vary between brokers and between symbols. So this is where this can go a bit wayward, and why it's important to test, at least on a demo. But if you use the market info function, the symbol gives us the current symbol, and we use this flag here, mode tick value, to say that we want the market info of the tick value from the current symbol. That puts that into this variable here that we've just created, and then we need to do something else. So our lots, which is what we're actually going to put into our order send function, usually is going to be our risk amount. So how much in dollars we want to risk. We're going to divide that by our stop loss. So we're getting a risk per pip towards our stop loss amount, and then we want to divide that by the tick value, and that will convert that into the number of lots that we want to trade with, so that we have so that our risk per trade is at this risk percent worked backwards. So the risk amount divided by the stop loss gives us the money risk per point. Dividing again by the tick value reduces the loss to the amount required to hit the desired loss per point. That's a bit wordy way of saying that, but fundamentally this formula here will give you the amount of lots you need for your trade. So we'll go through that, and it'll be an example so you can use that there if you don't quite understand what I'm saying here. It's okay, just understand that this formula with these inputs will give you that risk per trade. You can now put the lots value into your order send function, and off you go. Now, one thing it's important to do when you're, especially if you're using account balance as based on a when you're working out the lot size based on your account balance, you need to verify that lot size, because you could end up with something that's not suitable for your terminal. It won't be allowed, and therefore it gets rejected. So we can check for that very simply, because if you had a stop loss, let's say for whatever reason your stop loss was 4 pips and you were risking 2%, you could end up with depending on your account balance, but you could end up with 5 lots, 10 lots, 15 lots of to trade with. Equally, on the small side, you could be doing the opposite, and you could end up with a number of 0.05 or 0.005 lots, which would be too small for your terminals to trade. So we need to work out when that happens. So we can use a simple if operator here. So we take our calculated lots, we check if it is less than the minimum lot. So we're using this market info function again, the current symbol, and we're using the min lot, so the minimum lots that can be traded on that symbol. And if it is less than that, we'll raise an alert that's going to say lots too small to trade. Again, if we can use an else if here, and if our lots should be greater than, that should be greater than our max lot, so it's the opposite of min lot here, our max lot flag, lots too large to trade, so just that should be a greater than. But what we're trying to work out is if we have more lots, we're trying to trade more lots than the terminal will actually allow, and if we pass those things, then we can do some trading. So it's a very simple way to check your lot size and make sure you don't end up with anything wayward. Equally, you could put your own value of lots in here instead of the market symbol. So you could say, I never want to trade with more than a lot. You could chuck that in here, and you could say, I never want to trade with less than 0.5 lots, and you could chuck that in here. It would do the same thing. So we'll go over to the meta editor now. We've got a lot to put into our code, so without hesitation, we'll get straight into that. Okay, so we're back in the meta editor now, and we're going to add in our additions to this one. So we're going to do a few things here. The first thing we want to do is we want to put in an input so that we can set a fixed lot size. So very basic, the most basic form of setting up how many lots you want to trade is to use a fixed amount. So we can put in an input variable here, which I put in a double, and we can call this fixed lots size to make it clear to the user, and we'll set our default to be the minimum, because if somebody sets this stuff up and running without thinking about it, and want to set it as the smallest possible. So I'm actually going to save this as I should have done at the start, as number 10. We'll close that. And so we've got an input there. I also want an input to get a percentage from the user as well, in case they want to use that as their means. So we can do that by getting an input variable here, input double, and we can call this risk_%. So we do that, and we'll set this default to be 1%. So there we have two inputs, two means of going, and it will use the fixed lot size. Now actually what I'm going to do with the risk percent, I think I'm going to set this to 0, because I'm going to use that as my filter whether or not to use it. If the person doesn't enter a risk percent, then I'm not going to use that. So that's how I'm going to check that. So we come down here to our code where we're entering orders, and you can see here we've got this value here, which is the number of lots in our order send function, and we've just sent this as to a fixed value of 0.01. But obviously now we've got two things we can use. We could, for instance, put our variable, our input in here, and that would work, but obviously we wouldn't have our risk percent in here. So what I'm going to do here is we're going to get a variable, put this back to that for now, and we're going to find out we're going to create a function to get a value of lots. So I'm going to create a local variable here. We're going to call that lots, nice and simple, and we're going to set that value to a function that we're going to say called GetLots. So we have not created that function yet, but we will do in a moment. So I'll just chuck that in there into the short side as well. You could put this outside both, but just for simplicity, what we're doing today, I'm just going to put that there, space that out a bit so it's clear. So we can say we're going to use function to get number of lots to trade. So really easy to see what we're doing here. I'll copy that comment up here as well because it's the same thing. So now we need to go down to the bottom of our code and create a function. So we're going to return a double because that's the number of lots. It needs to be called GetLots. It needs to have that same name, and it doesn't need any inputs in this case. So off we go. Put our brackets in so we know what we're doing. So here's where we need to say, so the first thing we need to do is we need to work out if the risk percent input has been entered. So we can say that if risk percent is not equal to 0, so it's not been used, then we can, what we'll do with that is we'll just use our fixed lot size. So what we can do, in fact, what we can do here is we can say, what I'll do, a bit of better practice for you to see. So I'm going to create our return variable right at the start. So double lots, and I'm going to set this as a default to be our fixed lot size. So that by default, that's what it'll be. And at the end of the function, we will return that. But in the middle, here we go. We need to work out whether we're going to use the risk percent. So if risk percent is greater than 0, we'll get a new value for lots. So going back to what we said in our lesson, risk amount, we have a risk percent that's our value here. We need now our risk amount, which is amount in dollars. So we need to say that we need a double, we'll call it risk amount as we did. It's equal to our account balance. You can see that come up there, multiplied by our risk percent. So very easy. Now we know how much dollar amount or how much in your account currency you want to risk. So the next thing we need is a tick value. So we need a double. We're going to get a tick value, and that's going to be equal to market info, which is a built-in function on the current symbol, and we need the market. We need the mode is the flag underscore, and we're going to go for, let's see, what do we want? We want tick value. There we go. Don't get it confused with tick size. Make sure you get the tick value. Okay, so we close that bracket, put our colon on, and we've got our tick value. The next thing we need is to work out the lots. So the lots is going to be equal to, as we said, it's going to be equal to our risk amount divided by our stop loss. We don't have a stop loss yet. So that is a parameter that we need to put into here. Otherwise, that's going to create a problem for us. So we're going to get a number of a stop loss in points in there. So we divide that by our P stop loss. And then we will divide that again by our tick value. So that's going to give us our number of lots. So as you remember, we need to verify that and make sure that's not too big or too small. And we can also check the fixed lot size here as well. So we've got a value. Now it's either going to be this or it's going to be this, depending on what the risk percent here is. So here we can have our if statement. So if lots is less than, and we can get the market info, current symbol, just for sake of you seeing it, here's a different function to use the current symbol. And we're going to use the mode underscore, and we want the min lot. And if it does that, we're going to tell the system to, or we're going to alert the user to say lots traded is too small for your broker. Simple statement. And then we can use another one to check the opposite. So else if lots is greater than market info, symbol, these are exactly the same. I'll use them both. Generally use one in there, but I use them both so you can see they're both the same. Market info. Why have I done that? Mode, excuse me, max lot. And then we need to chuck in our alert. So alert, again, lots traded is too large for your broker, or maybe for your appetite. If neither of those things is true, then we want to return our lots as so we'll get an alert. It won't actually at this stage, it will still return the lot number. So what you could do at this stage is you could set the lots to being equal to the maximum lots, or you could do something else. So what I'm going to do actually here is I'm going to drop the alerts down into the if statement, so we can put another line in here with that if statement. So here we need to set, I'm going to say to set lots to 0, because we don't want to open a trade in this example. Our lots are too small. We want the user to recognize that there's a problem there. Again, you could set it to be in this min lot value, but we'll not do that just now. We'll just set this to 0, so that prevents any trades being open, because your broker won't accept it. So it gives the user a chance to evaluate whether or not there's something wrong with their calculations. It's especially important on the max lot size, because you on the max side you could end up with a position side that's way too big for your account. So it's important that we do that. So we've checked our lot sizes, we've verified them. So here we'll say we'll verify lot size, and here we've worked out whether to use, so we set the default to be, put this comment here, set default to be fixed lot size, and then we can have a risk percent, use risk percent if user sets in input. So we've got our getLots function. We'll just check that with the compiler. We've got a few errors. Here we go. So what have I done here? Have I missed a semicolon anywhere? Let's have a look. Get lots wrong parameter count. Oh, that's expected there. Expression required. There we go, there we go. Right, so I've used market info, I'm going to use one bracket on there, which is a usual kind of typo stuff you do in your code. That gets rid of them, and then there we go. So obviously I've got 2 open brackets on this side, 1, 2, and I only had 1 to close it, so I've added another one there and another one here where I made the same mistake. So that gets rid of those errors, and obviously we've got the wrong parameter count, and that's because we need an input for our stop loss in points. So here up here where we've set that, we need to do that. So here's the thing, at the moment we don't have a stop loss value for our account. So what we're going to do, we can set our input. So just in the same way as we did before, we get we'll use an int for this time, and we can set our stop loss to be a value, let's call it 20 or 200 points, which would be 20 pips. Let's call it stop loss points. And that's our fixed stop loss value. And we can also use the ATR. Now the ATR has one input, and that is the period, or the number of days it looks back. So we can say the ATR underscore period, and the typical value for that is 14. So we'll put that in for 14, compile that. So here we have, we can use that, but we need some kind of switch to say whether we're going to use ATR or not. So we're going to put in here another input, this time a Boolean, and we're going to call this use underscore ATR. So we're going to set this to be false. So unless the user selects it, it's going to use this. If the user sets that to true, it's going to use the ATR for that. So now we need to get a stop loss value. So we're going to create another function very similar to the one before, double, and it's going to be called get stop loss. In fact, we're going to set it to be int. It's going to be a fixed number, and we don't need an input, I don't think yet. We'll see. So again, we're going to return a value, which is going to be our stop loss. So that value needs to be an int, as that's what we're returning. And we'll set the default to that as our stop loss in points fixed value. We use an if statement again, and if I use ATR is equal to true, then we will set our stop loss in points according to that. So we need an ATR, so we create a value to get the value of the ATR. We'll use the built-in ATR function, which is IATR. We'll set and open brackets, current symbol, and this is a very simple one to use. And then it needs the time frame, which is, we use the current period. The period, so this is where it gets confusing. The period, this is referring to the actual number of days look back, which we said was the ATR period. And then the shift, and we're going to look to the previous bar. We're going to go back one. We refer to the last lesson if that doesn't make sense, but we're going to get the last closed bar, which is bar one. So we'll set that in there. And that's going to give us a value for the ATR. Now the ATR will give us a value in points, and it's typically in the range of something like 0.0045, 0.00010, depending on the time frame you're looking at. Obviously, points is not a decimal; it's a number greater than that. So we need to convert our ATR to a value that is like a stop loss value. So we can say ATR equal to, or we can set our stop loss, sorry. So our stop loss here is equal to ATR, and then we need to divide that by a special inbuilt variable called point. And what point is, it's it's, well, let's have a look. It is the smallest, it's the smallest decimal place of your system. So if you have, for instance, a 4-digit broker, it's going to return the value 0.0001. If you have a 5-digit broker, it's going to return the value 0.000001. It's the smallest one value that's available on your system. So if we divide by that value, it's going to effectively multiply the ATR to be something like a stop loss. Now this is setting the ATR to exactly what the setting the stop loss, to exactly what the ATR is. Now sometimes people like to set this as 1 ATR, 2 ATR, 3 ATR. So you need here in fact another variable. So we go back to our inputs and we put another one here, and we can have a double, and we'll call this the ATR factor, or let's call it the multiplier, and we'll set this value to, as a default, to 1. We take that, we can then add this into this equation here. So we've got our ATR multiplier. What did we call it? It's not come up. Yeah, ATR multiplier. There we go. And multiply that by the ATR and by the point. So if it's set to 1, it's just going to be what the ATR is currently. You could set this now to 2 or something similar. That's going to return a stop loss value, and that should then give us a stop loss related to our ATR. So I'm going to compile that. Now it's given us a warning here. It's worth going through. Our stop loss value is an integer, and these values in here are all doubles. So it says possible loss of data due to conversion. I'm not too worried about this. It's going to be rounded off at some stage. But it's going to be, I'm not worried about the data loss in this case, so I'm happy with that warning. We just need to put here our warnings for our get lots in. Now we've got a value for stop loss, so now we can put in here, in fact beforehand we can create a variable called stop loss, which is an int, and we can set that value using our new function. So we'll do that, and we'll copy that down to here, to the second time we use that. Where's the lots? Here we go. And then we can drop this value for stop loss into our function for get lots, and then it can base the function for that. So we'll do that, compile, and you can see that will now work. Now there is a slight issue here. If you weren't using any stop loss at all, you need to make sure that ATR is set to false, because the ATR, the risk multiplier, won't work, and as well the risk percent won't work if you've not got any stop loss at all and you've set your fixed stop loss to 0. So that's just something to bear in mind, but fundamentally that's everything you need to do to get decent risk management into your EA. So I hope you like that one on risk management. We spent a lot of time in the editor by now, but hopefully through the lessons we've done so far, that is not as scary an environment as it was when we started the course. Of course, the thing to do if you're not sure on things, go back over previous lessons, go back over this video. You can watch this as many times as you like. It doesn't matter how many times it takes you to do this, but it will click and it will come into your mind, and these things will start to make sense. And the great thing about coding EAs is you don't have to do this twice. Once you've got these things set up, they're set up for life. You can copy and paste them into all kinds of EAs and never have to rewrite the code. So really, really useful to do. So it is worth taking your time to go through, do your homework, to type these things up yourself and get familiar with the coding environment. Now we're on to our penultimate episode of the MQL4 series. So really exciting times. I did promise at the start of the series we would have 3 working EAs at the end, and so we will do that. But the great thing is we're going to do that by simply changing the entry types, so that you can see the most common types of entry, and you'll see how once you've got your framework for an EA set up, you don't have to code from scratch every single time, and it's really easy then to multiply the number of EAs that you've coded beyond there. So we'll look at some different entry types. At the moment we have an indicator value and a threshold. So we'll look at another classic in the world of entry types, which is a crossover. So most of you will have heard of something like a moving average crossover. And then we're going to look at a system of entry that I think is better, and I personally have back tested and has been better than a crossover. Something that's difficult to do if you're manually trading, but when you're using code, very simple to do and is better than a crossover. So we'll implement that into our third EA, and because we'll put these both into our code, and at the end we'll have 3 EAs with different entry types in there. So that's going to be in the next video. If you do have any questions, like I say, this was a long one today with a lot of content in the editor. So do ask questions either here in the comment section below, or join the conversation at the Toolkit for Traders forum, which is absolutely free to sign up to the members area. There's no cost anywhere in there. It's all free, and you can talk about things and ask questions about this course and anything else you've got coding related. And I do try and answer every question that I get, and so far I've been able to do that. We'll see how we go. But as always, if you like the video, do like and subscribe. Really encourages me, really helps me grow the channel. I've been really excited by the feedback I've got so far, and I would love to get this out to more people. So the way that you can help me do that is to like the video, subscribe to it, and also chuck a comment down below, even if it's just as simple as thanks for the video. It really helps me get the word out about the channel. So if you want to support me, I don't ask for any money, but if you want to do it, they're the ways that you can do to help me. And that's all for today's video. I hope you like it. Keep safe and keep well.